Hi friends, iKargos is back with fortnightly international logistics news analysis for the second half of September 2025. This fortnightly news would be analyzed under three major heads. 1. Trade policy and geopolitics reshape global freight. The imminent October 1st deadline for new US tariffs on goods including furniture, heavy trucks, and pharmaceuticals caused importers to scramble, directly impacting freight, transport, cost, and strategies. Tariff driven diversification. The tariffs, coupled with the US de minimis policy shift, are profoundly changing global sourcing. The shipping from China to India and other Southeast Asian countries like Vietnam and Malaysia has been a correspondingly increase. This trend highlights a critical shift towards diversified supply chain solutions. Carrier compliance adjustments. The major shipping companies and international freight services providers are actively adjusting their vessels network to avoid new US port fees, specifically targeting Chinese built or Chinese owned vessels, set to take effect mid October. Red Sea and regional tensions. Ongoing instability, particularly in the Red Sea, continues to absorb sea shipping capacity due to necessary rerouting, underscoring the high risk nature of major maritime corridors. 2. Ocean freight and air freight market dynamics. Market performance during period was highly fragmented, offering both challenges and opportunities for freight forwarding services and logistics solutions. Sea freight markets rate softening. Spot ocean freight quotes and general freight shipping quotes continued a downward trend on major east-west routes. This is primarily attributed to a persistent oversupply of capacity and less robust peak season demand than anticipated. Despite disruptions in Red Sea and carrier initiated blank sailings, congestion and efficiency. Port congestion remains a factor, particularly in major Asian transshipment hubs. The building up of empty containers is a growing concern, consuming valuable yard space and negatively impacting terminal productivity. This necessitates better logistics management and improved container flow. Air freight strategies market demand drivers. Air freight cargo volumes remain strong, especially on trans-Pacific eastbound routes, fueled by the transport of high-tech products like AI, servers, consumers, electronics, and high-value, time-sensitive goods. E-commerce demand, despite regulatory changes, continues to consume available air freight shipping capacity. New routes and specialization. Carriers, recognizing the need for specialized logistics services, are launching new routes such as FedEx Air Freight Service connecting Dublin and Indianapolis specifically to serve the pharmaceutical and medical sectors, which require robust air freight logistics and temperature controlled cargo transport. Pre Golden Week rush. The impending Golden Week holiday in China created a surge in demand and a tightening of space for air cargo service out of Asia, naturally pushing air freight rates and air cargo rates higher as the month concluded. Focus on technology and last mile solutions, digitization and AI. These are now essential tools helping freight logistics providers offer greater transparency and real-time data to manage the complexities of shifting tariffs and routes. Logistics consulting is heavily focused on leveraging AI for predictive analytics and smarter transportation management last mile solutions. Expansion. Major retailers are aggressively expanding their next day delivery coverage to meet consumer demands, leveraging advanced technology to optimize fulfillment and cargo delivery from regional distribution hubs. Conclusion. The need for precise custom clearance, competitive freight quotes, and robust freight insurance coverage is paramount as the market navigates a volatile mix of geopolitics, trade shift, and peak season pressure. That is all for this episode. See you again with the next fortnightly news analysis. Visit our logistics website for daily industry news and more. Thank you.